In this video, guys, look at trading the inside bar, but in a different way. Stay tuned. Hey guys, warm welcome to you. Thank you for joining me. All right, inside bar, probably familiar with the strategy. Just run over it very, very quickly. I want to talk about another way to trade it that I think is more like the real world way rather than the textbook way. Nothing wrong with the textbook way, but it doesn't really work as well, I find, as kind of making a few tweaks and adjustments so that you can just find the sweet spot for often these little kind of flurries and little ways of stopping people out before it eventually goes. So inside bar, very quickly, let's just kind of quantify this. We've got a bar here. An inside bar is when literally price is completely contained within the prior day's range. So an inside day, some people call it high, low. The next day, the high and low is well within the prior day's range. Pretty simple to understand. Now, many people, let's say we've got an inside day down here, an inside bar down here. And by the way, you know, I prefer this on a daily chart. I don't think an intraday chart is going to work for you. You might get one if you've got a kind of long wick here and it opens here, but it doesn't really have the same strength as a whole day's worth of trade. Don't forget, in a daily chart where each candle represents one day, that's a whole day's worth of supply, demand and auction going on. 15-minute, not so much obvious, but sometimes, you know, we forget that when we're looking at the chart itself. All right, so move down, inside bar. Now, many people will take this and they'll go short here. And that's fine if you've got a wide enough stop and you can stomach a few bits and pieces. I don't think that's a bad trade. I think you're not chasing. You're not like you're chasing down here on day three. Day three chase, oh, you know, it makes me cringe thinking about it. It does work sometimes, but generally speaking, you've had 3 days of big, strong move. You need some sort of breather. An inside bar, good kind of place to do it. Or even like a doji or something like that. But the better way, in my opinion, of trading this is to wait for one of two things. Now, the first one is by far the best. Second one, fine, but maybe you just want to look for the first one. So very often what happens, guys, is we get the inside bar and we don't always get a massive drive lower straight after. Sometimes we get a couple of bars of consolidation, and often we get this, where we get a push higher intraday above the high of the last two bars. And that stops a lot of people out, because a lot of people are taking the short here and they're putting their stop in here when it goes their direction, and they think the next day is going to go lower. And very often the market just has one little last flurry above some highs, takes out some stops, and then continues. And you see people get frustrated by this all the time. So a better way, in my opinion, now there's nothing to say you can't do that, but just be wary and you might end up wanting to have a stop, a wider stop, and being prepared for that in that way if you're going to take it straight away short on the first inside bar. If you want to be a little bit more aggressive, size up a little bit more, be prepared to miss some. There's no free lunch. We've got to kind of give with one hand and take with the other. If we wait until we see this kind of move, which is a little bit of a fake out above the high, takes out a few highs, sucks in a few buys, but then immediately rejecting and squash back lower, that to me is a better place for your short. You can quantify it easily with the risk management by putting your stop above there, and then you've got more chance, in my experience, to then continue lower, because it's not only is it holding at lows, not only has it had an inside bar here, and regardless of what these are probably inside bars, but then on maybe the second candle or the third candle, you've had that little push higher intraday that hasn't got any follow through and has failed. That to me is basically bears sticking their hand up and saying, yeah, we're still here, we're still ready to smash this thing, and this is just the start of it. And so waiting for that is generally better. Now, one thing to point out is you may not always get a close here, and be happily get plenty of time to stroll into your PC, open up and click the short button, the open or the close. Very often you might get kind of a really deep one. So it might start off like this, and then it might, if we just kind of do this, we might get that there then after the fake. So you might get it all in one day is what I'm trying to say. So a good way of kind of not having to sit there all day and look for this kind of thing if you're doing other bits and pieces is to set an alert for that inside day bar high and low. So you can set an alert for the high and you go, right, let me see. If it now comes back into it, you don't want it if it just goes through the high and carries on, because it's a reversal. But if it goes high, then comes back into it, off you go. You can start to initiate your short here, or you can wait for the close of the day or whatever. And the final thing that I said I was going to cover, which isn't so good, but I think it depends on the scenario, up to you as well. If it's in the right conditions, by all means, you know, give it a smack. But I think it's better if you can try and get the sweet spot, and that is to take a break of the low of the inside bar. So rather than doing that, let it kind of do its thing and then take a break of the low. But the warning for here is that, you know, we might also get this candle here. We're getting a bit messy with this chart, but hopefully you can see. Let's imagine that's our inside bar here. And our second one, we often get this, guys, where it does give you a little bit of hope. And then the next day it does that. And then finally it gives you the actual juice from the orange, so to speak. And that's often what happens. So, you know, if you're taking the inside bar, you're getting all excited for this, and it's, you know, then it kind of rips back up, takes people out. You know, very often we're catching people out, sucking people in, catching people out before the big move is there. So I'm always a little bit cautious about selling into that low. It does depend on the scenario. If this is real Armageddon and death, then by all means, you know, sell onto that second day through lows, because the chances of it continuing are probably quite high. But if it's, you know, mediocre selling, not super excessive, but, you know, a little bit of an overhang of supply coming in, then watch out for that, because it will suck you in, rip your face off with the stop, and then go, and you're like, frustrated. So waiting perhaps for that kind of little fake out and then taking it means you're just playing chess, let them go in, then you're hitting it, and then you're getting the follow through, guys. So that's a different way of trading the inside bar. I quite like it. Keep your eye out for that one. If you like this kind of stuff, thumbs up appreciated. Any comments you've got in the comment section below while you're down there, check out our channel sponsor. Take care, guys, whatever you're trading. Bye-bye.